Hey everybody, how is everybody doing today? Friday, July 1st, 2022. Welcome to the session, everybody. This is 3-day market commentary. This is Jose Blasco. My email is on the screen in case you would like to get in touch with me for anything related to this market commentary or anything else related to trading in general. My pleasure. We're going to be looking at the markets. We're going to be understanding the conditions, what's happening out there in 5 key markets, not only the S&P or the equity markets, but also other extremely relevant markets such as gold, crude oil, dollar, Bitcoin. So we're going to be looking at all of those. Okay, before we get started, as always, I would like to highlight on the upper left side of the screen our financial disclaimer. Please read it carefully. This is important information. It's fairly short, therefore I'm counting on you all to read it completely, please. Thank you so much. Very good. And with the disclaimer out of the way, we are now ready to begin. So let's begin. We're going to start our market commentary in case you have not attended any of these sessions yet. So notice how my screen is divided in 2 parts. On the left, I have our 3D approach, what we call our news flash. On the right, I have real-time charts, which I'm going to be utilizing to support the market analysis that we're going to go through. The news flash that you can see on the left, you could actually get it for yourself in case you are not able to watch this video every day. We do it every day before the market opens, 1 hour before the US market opens. But in case you're not available, you can just follow the instructions on the screen, tradewithufos.com/newsflash, and then you can sign up. It's free, and you would receive the information I am about to cover every day, 1 hour before the market opens on your inbox, okay? Anyway, so the first market that we're gonna analyze is the S&P 500. I have it on the right. We call these market commentaries 3D for 3 reasons that were on the screen a moment ago. The 3D approach. We look at the market climate, we look at the UFOs, and we look at the volatility. So let's begin with the market climate. And for the ones of you new to the sessions, you may be wondering, what is the market climate? Well, another way to think of market climate is market condition. You may want to think of trend, but it's much more than that. So again, I prefer to think about it as climate. Is it rainy? Is it sunny? Time to stay home or time to go out, right? And this is kind of like the idea. Is it a good time for us to trade the S&P 500 index? And if so, should we go long or should we go short? This is what AutoClimate is going to tell us. AutoClimate, by the way, it's a free app that you can get on our website, so you can certainly utilize this technology yourself. And basically, you're going to get a measurement which is based on statistics. There is no human interaction, subjectivity, and any of that. There is basically data processing. Computer do a better job than humans at processing data. So we just let our technology take care of it. And the result today on the S&P futures, it's a red and thick dot. Red means it's a down climate. Thick means it is confirmed. It could be unconfirmed, which is when we have these, we can see here on the left, for example, we have these thin dots. So thin dots mean unconfirmed. Thick dot means confirmed. In this case, it's confirmed and it's red. So it's confirmed to the downside. So we have a statistical advantage by being a seller. It's being shown here on the news flash. Current climate is down, confirmed, yes. And the statistics suggest that this down climate should last 2.98 candles on the way down. We've been traveling in that direction already by 3 candles. So we are now entering basically the time where going down is less likely compared to going up, even though currently we are still confirmed to go down, but we have surpassed what is normal. A normal thing to happen based on statistics is 2.98 candles on the way down. Because we went to 3 already, so it's just a little above and beyond normal, which for sure it could continue. But again, every day that passes is less likely it will continue falling. So in other words, for the ones of you who are planning to get short, I would say a bit too late to the party. For the ones of you that started shorting before, congratulations, way to do it. So again, if you think about trend, it's known that the trend is your friend. You may know the ending of that statement, which is the trend is your friend until the bend at the end. So then the real question is, when is the trend going to bend? Well, it depends on the statistical duration of the trend, which right now is entering the less normal status, and therefore more likely going to reverse than continue. But also, for this to happen, we need the UFOs, which is the second ingredient The second dimension of our analysis, the buy and the sell UFOs. UFO stands for on-field orders. On-field orders to buy, green color, below price. On-field orders to sell, red color, above price. So we have on-field orders to buy at 37.13, between 37.13.5 and 36.39 to be precise, and we have on-field orders to sell up here between 38.92 and 39.50. So the values are there on the news flash. Again, you can receive that on your inbox. It's quite handy, and therefore my expectation here would be for the S&P to continue lower for a little bit and then bounce. And ideally, if it reaches the upper UFO, then that's it. We are down. We are again back down into a downtrend, into a down climate to continue. But so far, I would expect a little bit of a bounce, given the fact that the climate has reached 3 out of 98, and therefore, statistically speaking, is less likely going to continue to the downside instead of reversing. Even though statistics are to be broken. Notice this prior climate. I was very aggressive on the way down. It took more than 3 candles. As you can see, if you count the amount of dots, it's more than 3. But again, statistics are suggesting that, okay? Volatility, which refers to speed of movement, we take that information out of the VIX, which is the implied volatility of the S&P 500 index. So we are using options data to understand implied volatility, and that is 28.70% in a year in a 1 standard deviation. So 68 point something percent of the cases in 1 year, you would expect it to move either up or down 28%. But if we reverse engineer the pricing models and we apply it to a 1-day move, that is 68 plus points a day, either up or down, or 100 plus points a week, either up or down, or 312 points a month, either up or down. This would be the expectation for speed of movement for the S&P. Okay, so hopefully these 3 dimensions help you understand better the market condition. In the case of S&P, I'm using futures because it trades 23 hours a day, so we can have a more accurate understanding of the markets, especially before the equities start trading at 9:30 a.m. in New York, 9:30 p.m. in Asia. But again, looking at the futures is great because they don't stop. I mean, they stop for 1 hour a day only. Crude oil is the next market for us to analyze. I'm going to do the same. I'm going to use auto UFOs, auto climate, mechanical approach to doing our analysis. No subjectivity, no human factor, no trading guru telling you because of a magic skill that no one can have, telling you what's going to happen. I'm not about that. I'm all about the simplicity of having computers process data instead of humans and give us objective measurements of that represent specific situations. So in the case of crude oil, and by the way, I have highlighted on the screen how you can get your auto climate, how you can get your auto UFOs. You just go to tradewithufos.com/apps and you will find it all there. Feel free to email or consult with us if you have any question. But basically with crude oil, we are talking about a down climate which started yesterday. Actually, yesterday I was talking about it. So today the climate continue is number 2, and the statistical duration of the climate is 5.78. So in other words, it should continue to the downside for longer. And crude oil today is rallying pretty strong, about to enter our red UFOs located at 109.22, 114.05. So in other words, it's almost, I mean, if you are a UFO trader like I am, of course, if you are not familiar with the techniques, I would suggest that you educate yourself. We have many educational tools on our site as well before you use it. But if you get the rationale of what I'm explaining today, we are in a market where statistics suggest being a short seller carries a statistical advantage, and price is coming very close to a price point located at 109.22, just a few ticks above, where at that price point, we got sell on field orders kicking in the market. So the expectation would be a drop from that price point, and therefore a shorting opportunity is around the corner if this is your trading style. Exciting, because if that crude oil starts falling, we could see crude oil fall for at least 3 days non-stop. Easy, at least based on what statistics suggest. Okay, so 2 out of 578, that's a good timing to get into a trade short and experience and enjoy the development, the propagation of the climate, in this case to the downside. On-field orders to buy located at 80.47, plenty of room for crude oil to fall. I mean, realistically it looks too good to be true, and when that's the case, typically somewhere in the middle, institutions would step in and add new buy orders. The large market players will step in, and either because they are taking profits, you buy to cover if you're short, or you buy back. So all this buying may create demand, and then green UFOs may show up on the chart, because not all orders will get filled, and therefore we would get to see additional unfilled orders in the market. So again, the beauty of the technology is that it will show that real time if that was to be the case. So far, we are about to hit the sell unfilled orders, and there is nothing to stop crude oil to fall all the way to 80, which is that that's the case. I'm sure we'll talk about it in a future session. Speed of movement is expected to be 48.9% a year. This is extracted from the implied volatility of options on crude oil futures, meaning options on futures for crude oil. And when we reverse engineer that pricing model, we basically end up with 3.3 points a day, either up or down, 7.3 points a week, either up or down, 15.2 points a month, either up or down. Very good. Next market, okay, flying from market to market is going to be gold. I am highlighting as well, I mentioned a moment ago, the fact that it will be convenient for you to educate yourself if you need to. Some of you, I'm sure, listening to this market commentary today are experienced traders, and you may not need education at all because you know what you're doing, and therefore keep it that way. But for the ones of you who are newer to the markets, just know on our site there is a collection of courses. And talking about courses, you can see that highlighted in the bottom part of the screen. On July 9 to 15, we are launching our new crypto course. There is a pre-launch promotion, 61.8% discounted fee for the course. So I would say if you want to get into this digital assets arena, go grab that, because it's going to be a powerful course that will help you. Obviously, we need to be properly trained and educated. But now let's look at gold. Okay, so what's happening with gold? Well, if I load gold, and here the UFOs show up and so on. Yesterday we were talking about how with gold, finally the boringness that we have seen for a while with those, thin dots, many days of thin dots that were representing no confirmed climate. Finally, that was broken 2 days ago. I commented on it yesterday, but it was broken 2 days ago with thick dots, finally. And guess what? Here we go. Gold is moving, okay, moving to the downside, okay? But caution, because many people now may be thinking, okay, let's short gold. Careful. Why? The climate is down and it's confirmed. So in one hand, you would say, okay, let's be a seller. We've got a statistical advantage based on the climate. Great. But we've been in this climate for 9 out of 5.69 candles, meaning that we've surpassed almost double the normal duration of a down climate, which is kind of like a 2 standard deviation extra duration for what a normal climate would be, and therefore we may be dealing with something non-sustainable at this moment in time, as we are entering a price zone, a price area where we got unfilled orders to buy from 1753 to 1781.3, and therefore this price zone is very likely going to bring this back up. So again, we need to look at this, because in no time we may have new red UFOs show up here, and then it would be great to have a little bit of a pullback and be ready to get short into a red UFO and take advantage of gold falling, which seems to be the direction in which gold wants to go. But careful, because that climate has lasted for too long, and coming into a green UFO means that gold is more likely going to go higher than lower based on statistics. So I would say careful with that, at least in the short term. Speed of movement out of GVZ, which is the implied volatility of options on futures, options on gold futures, is pointing at 19.61, which if we reverse engineer pricing models, that would point at 22.11 points either up or down in one day, 48.67 points either up or down in a week, 101.31 points either up or down in 1 month. This is what we have when it comes to gold. So let's move into the next market, which is the dollar index, which is probably the one responsible for everything that is happening globally. So, and by the way, I'm highlighting here tradewithufos.com/coaching on the screen, because we talk about the real-time trading and definitely dollar in our live trading sessions. You guys can go and take a look at our website. You can see the calendar and so on. And again, the dollar going up so strong is responsible for many markets falling. Why? Because if the dollar is stronger, you need less dollars to buy whatever else you trade. And therefore, the price of that whatever else is less. Why? Because with less dollars, you can buy it. Why? Because the dollar is stronger. So again, such an important market, such a relevant market for us to assess and be aware of, where we are now dealing with a climate which is confirmed to the upside. We've been in this climate 3 out of what statistics suggest 4.93. So dollar could continue moving higher for another couple of days, easy, based on stats. And if it was to fall, 102.85, which is right here, we got buy on field orders waiting to get filled. So if gold was to react to this high and come back down, so probably we're going to see dollar go back higher. Not sure why I keep saying gold. Sorry about that. EVZ is the implied volatility of options on currencies. So we are talking about 9.70%, which is 0.64 points either up or down in a day, 1.41 points either up or down in a week, 2.93 points either up or down in a month. I'm kind of rushing the speed of my talking here, given the fact that I just noticed I just surpassed the ending time of the session. So we need to keep it shorter here. I will highlight some of our social media links for you to take a look at the things we do, so you can join some of our live sessions where we rush less than I am rushing at this moment. Bitcoin is the last market we're going to analyze. We're talking about a down climate, which is confirmed. We've been 17 days into a down climate. This market was moving higher today. It looked like Bitcoin wanted to reverse just to hit the sell on field orders located at 2120, and from there it's falling down and it's currently trading at 19285. This is Bitcoin future, which may have a little bit of a price difference compared to Bitcoin cash. Okay, but again, same animal, is the same market. So BVIN, implied volatility for Bitcoin, 93%. That is 1,100 plus per day, either up or down. Almost 2,500 a week, either up or down. 5,000 plus, either up or down in a month. That would be the expected speed of movement. So if we see Bitcoin trading at 15,000 in a month, it's not going to be a surprise. And guess what? When we get to those levels, look at how many buy on field orders are available. So that looks like a very good place where to maybe start positioning ourselves as buyers of Bitcoin. But that's at this moment in time, with a down climate and sell on field orders overhead, definitely let's not be too hopeful. Because everything is pointing at the downside, even though things may change, new on-field orders may be added. Good news, auto UFOs would plot that on the screen real time. Economic calendar today. Okay, we got PMI, Producers Manufacturing Index, relatively relevant. Again, the one that everybody's focusing on the last, I would say, let's call it a year. It's obviously the inflation rate more than the Producers Manufacturing Index. But anyway, it's certainly relevant. So take a look. It's happening at 10 a.m. in New York, 10 p.m. In Asia, and somewhere in between if you are somewhere else in between in the globe. Okay. Anyway, everyone, it's been my pleasure as always to conduct the session. I will see you again in the next one. You have a great Friday trading day, and also a great weekend. And we will see you soon, my friends. Bye bye. Trade well. See you soon.